that, I'm going to turn it over, I guess, to Stephen. Are you going to open up?
Yeah, I think I
Okay, good.
Thank you. There's a handout I gave to everybody. They're on the tables in case you want to sort of go along with the presentation. We wanted to sort of give you some insight into the budget process and some of the items that are important. So as we go through it, as Mark had said, let's make sure we stop and answer any questions you have, because if you have it, possibly somebody else has the same question as well. And most of the time, this time of year, we look at the operational budget. Everybody's interested in the amount of the monthly carrying charges that they're going to have to pay. But there's another important budget, which is the long-term budget of looking at how we're going to maintain the property. You may have noticed in your financial statements that there's generally a paragraph which talks about the main body of accountants saying that because these buildings are your homes, we need to make sure we maintain the value and they continue. We can't build a new building across the street and move everybody over. So it's important that we look at that. You're very lucky with Argo as a property manager in your choice, because they do such a good job of keeping on top of the projects that need to be done, bring them to you as board so you can deal with them. But I just didn't want to let the presentation go without reminding everybody about the long-term budget. A lot of times people say the financial statement is the most important financial document as to what's going on in the building. And in some ways, that's sort of a look back. We send that out April, May for the past year, and yes, that confirms the actual numbers to the unit owners. But in many ways, the operational budget is really the important one, because that's the one that's going to set what everybody has to pay. So a lot of emphasis this time of year on doing these. So it's an important process. You know, we want to have a yardstick to take a look at as we go through the year. Generally, it's called benchmarking as to, hey, how are we doing? And we want to focus on that. And by doing a comprehensive operational budget in the process that Argo uses, you get that type of detail. That way you can look at yourself. And it's not only why did we overspend on certain expenses, but there's the other side of it is, what's going on? Why haven't we incurred this expense? Is there an issue, let's say, with the water meter, that the bills are not where they should be, or we're not getting them? So there's both sides to this. It's an important internal control tool. The internal controls have really been evolving the last 5 years. These are the policies and procedures that protect the board and you guys from anybody pointing a finger saying that, you know, something went wrong and there was an issue. And they've been evolving to go to different principles, and one of the big ones the last 10 years or so has been governance, the board taking responsibility for the numbers and for things that are going on. And you guys are volunteers. None of us in the industry expect that this should be your full-time job, but yet there has to be some balance, and it's really important, and you're showing your dedication by coming to a presentation like this, that you want to have the information that you need in order to make sure you do the right thing with the internal controls. One of the other things that's important about the budget is to highlight the items which are out of the whack or are unique. This way they potentially are things that somebody's going to ask about, and you know, maybe when you were at a board meeting and brought up that certain work needed to be done, you may or may not have realized the impact on it. So sometimes when you look at the budget in context to your operations, you get something out of that. Now, responsibility is a big issue. You know, a lot of times people say, who's supposed to do what? And you know, communication is important from everybody working together to get the most comprehensive budget. These days, with costs going up, nobody wanting to pay any more than they have to, we really need to sharpen our pencils and make sure that we get the best budget process. So, so it's important that we know. So, you know, we know that Argo is going to take the lead in preparing the budget. But I think as treasurers, there's a role that's important for you guys to try to facilitate the process. You have knowledge of what's going on in the building. I know the property manager will visit the building from Argo, but still, you're living in the building. You can bring information into the process. Getting information on a larger property from other committee chairs. You know, we have buildings that have 10 committees. If it's a big complex, it's really important. It may not all get down to the budget level if somebody doesn't reach out and try to facilitate the process. Normally we would suggest that the budget be looked at by the treasurer and Argo in the first step before it goes to the whole board, because as I said, you have information, you can add something, and let's get the best possible product that goes there. Many of the offering plans do require the budget be submitted to the unit owners and by a due date. Sometimes that happens with our clients, sometimes it doesn't. So you may just want to realize that there may be a requirement that you not only give them a financial statement, but you also give them the budget. So when a budget gets brought together, we sort of have what just happened, what historically happened, what we expected was going to happen, and now we're going to project what's going to be in the future. So we sort of use that premise when we're creating the budget to get the data together to come up with the best possible budget. And it's really a very good time to take a look at where we are in the current year. That doesn't always happen. A lot of times we focus on what's the future and not take a look at where we are so far this year. Important items are prospective purchasers are being very sophisticated. They are looking at financial statements a lot more. The banks have checklists and they have certain items that they're supposed to look at. Deficits, while maybe we can explain them, are generally frowned upon. So we don't want to be in a situation where when that financial statement comes out, as I'm saying, 3-4 months later, that there is a deficit. Well, during the budget process, if we take a look at where we're going for this year, we might be able to head off an issue and make sure we have a better presentation on the financial statement. And now we're seeing letters come from lenders if there was losses 2 years in a row. So then it becomes a potential default on a loan that you might have. So it's really an important aspect to take a look at it. So in the budget process, we're going to take where we are this year. We're going to add into the calculation what we think is going to be for the next year. And I would love to be in the situation that I could project the future, because I would be on some Caribbean island making investments as opposed to being an accountant. But of course we can't do that, so we try to do the best we can. So we try to look at what's going on. And this past year was a great example, past couple of years. If you use natural gas heat, your heating costs will way down. If you used fuel, they will way up. So you can just see that you can't just look at it on, let's say, utilities or heat as a detail. Sometimes when we're looking at the historical stuff, if we're new to the board, we can look back and say, hey, what was in the thoughts and minds of the people before us, and where are we at? So a lot of times it's helpful to have that. The financial statements come in very handy as part of this process, because a lot of times there's information in there that we may forget about. The mortgage may be coming due, there may be an extension fee due, so there's a whole bunch of information. So it's a good idea. It's generally been about 6 months since you got the financial statement, so to take a look at it as where we are going into the new year. If you're new to the process, as I mentioned before, a new treasurer, you might want to take a look at board minutes before when you were there to get a feel for what was going on. talk to the prior treasurer, maybe talk to the property manager to try to get some information. We like to use the approach as best as possible to bring outside information into the budget as opposed to this is what it's been and this is what it's going to be, sort of projecting it going forward. So anywhere where we can, we try to take a look at. So something like talking to the superintendent about repairs. What really went wrong last year? Was it a bad year for repairs? Is there a bunch of things that we know are going to have to be done this year? Some of this investment can be really helpful in fine-tuning a budget. Heating consumption reports. The last 2 years generally have been warm winters, and actually it's been 2 years ago it was actually a cold March. So that type of information, looking at your consumption numbers, if we just took last year's heating costs and used that for last year's consumption, we might not be prepared for a very cold winter, which potentially can happen at any time. We use an insurance broker, and they get a commission every year for renewing the policy. So reaching out to them and saying, what do you think our insurance is going to be for the new year, is a great way to make sure that you get a good number. This is actually a time where we're seeing substantial increases in insurance on our clients. So we want to make sure that we know where the premium's going and make sure we have the best possible. It's also an opportunity to take a look at the insurance coverage. It's sort of, we go about a board, we come to board meetings, it comes up, what was it last year, and we renew the insurance. Budget process is a good time to say, hey, what are these policies? What are the limits? Every year we come up with a handful of clients where we'll say, your numbers on the amount of insurance you're carrying don't match what we're seeing on other clients. So that next thing you know, we see is an increase in the amount of insurance. So, it's a good idea to go through it, not just to rely. So it's a good chance to review. Katie's going to talk about real estate taxes. So that's just one where there's a lot of information we can get from the outside to bring in. So I look forward to her presentation. So when we get down to the doing the actual budget, we want to say, okay, what can we project for our revenue? What are our current carrying charges is generally the model. But we've had collection problems for the last 5 years. A lot of the newer condominiums have people who got in over their head. Those things haven't worked out. So we can't always say that we're going to get the full amount that we expect. So it's something to think about. Other sources of income are always good when we can then supplement our monthly carrying charges. So maybe we need to take a look at those other items and say, is this out of whack with what's going on in the industry? I've had a number of buildings that have gone and looked back and said, wow, to go to a storage facility would be a lot more than what we're charging for storage inside of the building. These little, what appear to be nickel and dime items, if we can keep expenses down and build revenue, we have the opportunity to maybe shave something off of the increase. So it gives us an opportunity as part of the budget process. Believe it or not, co-ops and condos pay income taxes. There are minimum taxes that are due. So another source to get information from the outside is we'll get a request many times from Argo of where do we think the taxes are going to be in the future. So it's just part of the budget process that goes on. So those were the items I just wanted to touch upon of where we can get information from the outside. There's some relatively easy to calculate expenses. One of the easiest is salaries. We generally know how many hours the employees are working. We generally know what the benefits are. So that's a relatively easy one to do. I always like to say around this one to treasurers is, do you look at the overtime that's going on? Because there's many times there's some dollars to be found if we could just try to do our best to manage the men when they're going to be out for holidays and vacations and things like that. So just a heads up, I wanted to bring it up. Now, one of the items which is happening this year, which is unique, is that the 32BJ contract is up in April. So we don't know what it's going to be going forward after April. We'll have to project for now, go through the process. It may or may not be a big change from that. And then also on the employees, the employee benefits are going up double digit. So, you know, I think a lot of us have read in the paper about what's going on with health insurance costs, that they're going up double digit. The pension plan, at least in 32BJ, we've had some new disclosures as accountants as to actuarially where it's at. It's actually in the red zone. Now, it's not something for you guys to be concerned about because it will work itself through. We just pay what the union requires. But still, there have been instances the last few years where, because of low interest rates, we've had to do a catch-up to maintain the return on the retirees that are in the plan. That's just more cost to you guys. So we have to realize that those things are out there. I touched upon utilities a little bit. There's information on the websites for Con Ed, so you can get consumption numbers. I love the Argo model for the budget. I've used it in other presentations as a sample. So it gets down to the consumption level, but that's the level you need to get down to in order to do this right. And then you've also got, as I said before, think about how does that consumption match to years back when we've had a couple of very warm winters here. Water and sewer charges, information's available on the internet. The real estate taxes, there's information the city puts out. So those are those are easy to calculate numbers. You may want to take a look at what it's running on professionals and things like that to try to keep those numbers in line. It's a good opportunity to maybe think about periodic looking at your professionals when you do the budget process. You know, we all get used to using the same professionals, but you never know, there may be something better out there, and if you don't think about it, it's not going to happen. So that's the easy to calculate. Now we get to the tough ones, and the big one is repairs, because it could be all over the board. You can have a year where all kinds of things break, and you can have a year where nothing needed to be done. You can have a board that deferred all kinds of repairs in the interest of keeping common charges down, or you can have that we were catching up from a case where we had deferred maintenance. So really, communication is the key for this type of expense. And to me, you need detailed information. You need to go back several years, and you just need to try to use the best information you can to try to come up with the projection. And I mentioned before talking to the resident manager, the super, hey, where are we going, what's it running? And then at the same time is, how can we save? Are we sure we're exercising every opportunity to save? And as far as savings, we do find that rather than bringing in an outside vendor, if your employees will work outside of the union time and it's comfortable for you and for your attorneys and for Argo, if you pay them on the side, that's a lot cheaper than bringing somebody in. Sending somebody to a course on your boiler system rather than having to have an outside boiler company come in, great way to save money. So these are just some ideas that you can possibly consider. Some of the, not so much here in New York, but there are state statutes that require timing as far as the review of the budget and publishing it. And also people like to know what their costs are going to be. So it's really important to try to move through the process. This is a very busy time of the year in getting all the budgets. We tend to do them on the calendar year. The holidays are coming, so sometimes they fall through the cracks. And if we miss getting it onto the January bill, let's say, now we're 8% behind on the increase if we don't bill it, if there is one, because we missed a month. So now the question is, do we catch up in February? Do we spread that over the number of months? So I had an example of a July year end. We were just getting a budget approved the other day. They only have 10 months in the fiscal year to do it, And what was a 9.75% increase ended up being almost 12% because we had to do it over 10 months. So it's important to try to keep it up on the schedule. Some of the tips I like to put out is no matter how good of a job you do here in the budget process, that you're going to find things that are going to be out of whack. But that's what the whole process is about. So just realize that it's a very subjective type thing. Monthly budgeting when bills are due. So a good example is real estate taxes. They're payable quarterly. When we can turn the data into that and we can really see our cash flow the way it should go, it's the best possible way to use the budget information if it's an option for your building. On some of the smaller buildings, it's hard to come up with money, when things come up. Real estate tax is the one that most buildings will escrow for. They'll put a monthly amount into a money market account, let's say, if the bank doesn't require it, and then they'll take the money to pay the real estate taxes. On smaller buildings, you can go further than that. You can include water bills that are quarterly. You can include, all kinds of expenses. We have one where they actually, even because we bill quarterly as accountants, they put part of our fee in there and then they take it back. So just a food for thought. What's great about an escrow is it keeps your cash flow on the expenses. If you didn't pay something, you'll find it because the money will go out. So all of a sudden, wait a minute, why did our cash go down thousands of dollars this month? That's where you'll potentially see that you're over budget on something going on in it. So I opened up about the difference in the budgets, and I sort of talked about the main body accountant's requirement for the long-term study. That's required in California and Florida. It's not required here in New York. Well, what's happened is for the condominiums, Fannie Mae, the investor in almost all of the loans on apartments, is saying if we don't do one of those useful life studies, then 10% of the common charges need to be put aside for reserves. That could be a burden for a lot of buildings. I tried to phase that in on my clients, but in some cases it's a 10% increase. But it sort of goes to how important it is. I just did a meeting last night for one of the Mitchell Lamas where they were going for an increase for refinancing in their monthly carry charges. The State Department made them get a physical needs analysis, which is basically the same thing. What does the building need? They needed $5 million. Where do we get $5 million? Luckily, in this environment of low interest rates, it's a great opportunity to borrow. But it doubled their borrowing costs, so therefore they needed an increase. The important part is the need study was done. So I just want to make sure you guys think about that in your fiduciary responsibility of, hey, over the next 3, 5, 7 years, what is our way of doing this? How are we going to get through the work that needs to be done? And then the other side to this is how are we going to fund it? Because prospective purchasers don't like assessments. So we want to try to find a funding vehicle. So this 10% for the condominiums is an opportunity to be a funding vehicle because it goes into the reserve fund, the money's there. They don't say you can't spend the money, you can spend it the day after you put it there. The key is to bring it in. On a lot of the co-ops, transfer fees or flips taxes was the old term, are used. But in some way, I'd like you all to think about a long-term funding vehicle so that we're not relying on assessment. And as interest rates potentially go up in the future, we may not have refinancings available to use to raise funds. So there's a little bit more in the handout about the long-term budget, but I'm not going to dwell on it. I guess to sum up, the important part is let's communicate, let's get the information together. Eye to detail will help in many ways, not only to keep the carrying charge increase down, but also to enhance operations and make things move better in the new year. And really, to me, the budget is one of the most important financial documents. I didn't get asked not for any questions, so I guess I'm gonna ask. Any questions, or did I do that good of a job? Yes?
I have a question. Excuse me. In our monthly charges, we put in a very small amount as an assessment, which goes directly into our reserve fund. Okay, but you're suggesting that assessments may not be the most palatable way for, I guess, buyers and shareholders. Would you recommend us just folding that into the maintenance and eliminating that as an assessment? Or because then we don't know how long we're gonna keep this assessment going. We've had it for a couple of years to build up the reserve fund, so it's a little healthier. But, you know, any thoughts about the best way to go about this?
Okay, so that was gonna be my first question. Do you have a date that you feel that it may roll this off?
It's been open-ended. We've had it for about 2 years now.
Okay.
It's a very small percent.
Okay.
But certainly nobody's complained, but it is out there.
Okay, so to me, the key to it, as I said, was a long-term funding vehicle. If you have transfer fees that are working and you feel that that's your long-term funding vehicle and this may fall off, I would lean towards leaving it the way it is. But if you and the board decide that this is part of, or you decide to enhance it as your long-term funding vehicle, then I would suggest you roll it into your monthly charges. And what your accountant can do is they can take it out of the carrying charges on their financial statement and show it as that's for the designated fund, and you can still get the benefit of the tax advantage of increasing the basis on your apartment for that part you pay in. You don't need to do it separately. There's nothing in the IRS code that says it has to be a separate assessment. It just needs to be established in advance that it's for capital. It needs to be accounted for as capital, put aside in a separate account, so it's outside of operational, is questionable, but that's what I would recommend, and then ultimately spent on capital. And there's always capital that needs to be done on these buildings every year. There's always something. So that would be the best way. So I would have the conversation about the long-term funding vehicle before making that decision, but you're doing the right thing by putting something aside and building reserves. Everybody's looking to say, hey, which building has the reserves? Yes?
Can you give some more examples of long-term funding vehicles?
The question was examples of long-term funding vehicles. So that 10% I mentioned about the Fannie Mae requirement, that it's a requirement for condominiums that in their budget it be set up, because they didn't do one of these physical needs assessments, 10% gets segregated to the reserve fund. So what Argo would do is every month, maybe just before they build a new month, I think that's about the 20th of the month, they would look back at what was collected and move that money into a separate bank account. Now it's no longer in your account to pay your regular operating bills. So we've accomplished what I was saying to the gentleman of setting it up for capital, because now it's over there, and that bank account would be an account that Argo would accumulate as sort of a restricted account and can only be used for capital. So that's one way to do it. Another way to do it is what's called transfer fees. Every time somebody sells an apartment, a certain percentage is either paid by the buyer or the seller, depending on what your policy is. And that money goes into the reserve fund. That's a great way to make the exiting person pay for their use of the components of the building. Because while they live there, the elevator got a year older every year, the boiler got a year older. Ultimately, all that work's gonna have to be done. And 20 years ago, buildings were frowned upon that had transfer fees and flip taxes. Now it's the norm. Now I sort of hear, why don't you have a transfer fee, more than I hear, why do you have a transfer fee? So that's another one that will do it. We used to have the J51 program. It unfortunately expired, but there were tax credits when work was done, and it would reduce the real estate taxes. So we would work with Argo and say, let's gross up the budget to what the taxes should be, and then take that money that we're getting benefit for and move it to the reserve fund. I have buildings that put the storage fees into the reserve fund. There's one where a couple of months of the antenna leases gets moved over. It's really up to you how you can work it in your budget. But you get down to, it's dollars in, dollars out. You've got to come up with this money to put aside as your long-term funding vehicle. So it potentially is going to cost your owners more money.
So, part two of that would be, does that mean that in addition to building in things like this, are you also talking about avenues, other revenue streams coming in as well? Beside, separate to this, like we have 1,119 units, so, we've got a beauty parlor that we have there, we've got a dentist that's there, we lease out a garage. There's a tension that usually is about, well, co-ops can't be, not supposed to be making all this money, so to speak. And I sort of need a distinction in terms of revenue. Do we need to find other tenants for spaces that we may not be utilizing? Is that part of that, or is this more on a higher level?
Okay, so right now, from what I heard, the existing tenants are already in your budget, so that's calculated into how you pay, how you're charging people. So potentially you have other stores which you're not going out and pursuing, or offices, you have other sources that you potentially could get, but you're choosing not to. So if you're going for a long-term funding vehicle that you don't already have, you're in a great position, because that is a great way. If I was one of your unit owners, if you were charging me carrying charges and you could collect money from someplace that you're not, I would say you're charging me more than you really need to. But if you say, but we know we need to put aside $2,000 a unit every year into the reserve fund to adequately do our long-term planning, so we have the money there, then you can do that calculation and say, that part of what we're collecting is not profit. I need to put that money away because we're gonna have to do that work. It's gonna be, unless I have a brand new building, and even on the brand new buildings, we say put the money aside now, because sooner or later there's gonna be work that needs to be done. So I would enhance revenue as much as possible, and then if it's an income tax issue, I would work closely with the accountant to try to make sure you minimize any income tax effect. But the part that you put into long-term planning is not taxable income. So you solve that problem. So I would maximize. Yes, I saw her first. Excuse me.
How frequently is it recommended that a full physical assessment be done in the building?
From what I've heard, it's 5 years. But I think you could go longer if you have a really good one and you have a strong super resident manager, or you work with an architect because remember, local law requirements are certain systems are looked at. And you have a very professional property management firm in Argo they can give you advice. So I think you can go longer. It's that first step. It's that, and that's a scary step, because you may find out things that you're not aware of, and that can be good, that can be bad, depends what you want. But the important part is, it comes up in the board meetings. We try to recommend as part of internal controls that long-term planning or strategy come up once a year. So, it depends on when you do it. We have buildings that do it in January after they do the budget process. We have others that do it in the summer, but I know a lot of people leave town, so it really depends on what's good for your board. But there's a lot of things that should come up on your agenda once a year of, hey, what are our risks? How is our board functioning? Are we really doing everything we could? And then another one is just a section of the how do we save money? I know everybody's watching. I know the property manager's watching and everything, the super's watching, but having everybody have the conversation and say, we're going to have this meeting and just discuss about ways to save money, I'm pretty sure you're going to find more ways to save than you would have otherwise. And I think it's just good governance to do that. Yes, sir.
You talked a lot about reserves. What is an appropriate level for a reserve fund, and how do you determine what the appropriate level is?
Okay. So the best way to answer that question is to get your physical needs assessment and then look at what you're going to need in the future, And then we make a plan, how are we gonna fund it? Do we have enough money already? Can we, next time the mortgage comes up in 3 years, we're in a position we'll be able to take another so many $1 million. We start an assessment now to make sure we have the money when we need it. So you have the opportunity to do the planning then. If you don't have that, or you choose not to because a lot of the lawyers come out and say, don't do these disclosures on the financial statements. So there is a little bit of an area there. You have to be careful how you do this. But if you choose not to do that, then it might just be a matter of have the professionals at Argo give you an evaluation of what they see is going to need to be done. And then look at how much money you have now and do it that way. You know, there's a lot of benchmarks out there. I personally like a per unit amount to look at what should be in the reserve fund. But you know, that's very subjective, because if your building is going to need lots of money, your reserve fund should be up here. If you just did a lot of work, your reserve fund can be here. And this will grow over time, so you have the money the next time. And this one you'll spend down, and you can get down, but then you should come back up.
Stephen, with respect to reserves, can you comment on the fact that if a building has a line of credit, can that be construed as part of the reserves?
So a line of credit is generally a second mortgage on a co-op. It can be a loan on a condo. It's less common, but you can draw down on the line when you need money. So it tends to be emergency money, because as soon as you activate it, you're going to have to pay more interest, and they're generally variable rates. So, you know, as of today with the government shutdown, I don't know what that means for interest rates, but I do know that we've had very low interest rates for the last few years, so I'm going to err on the side of saying I think they'll be higher in the future. So that's sort of the concern about using a line for a big project. Yes, it's available. Yes, you can use it. Yes, it can work for that, but there's some risk to it where your rates will be. And you know, when that comes due, can you roll that into the loan? You should be able to, because the lender shouldn't have given it to you if you didn't have enough. So yes, it's part of it, and it can be used that way. Just seems to make more sense in this environment. If we can get a second mortgage or a lock-in at this point, it might be a better play at this point. But I can't say that for sure. Yes, sir.
Talking about the line of credit, since it can be used for emergency money, rather than keep $200,000 in the reserve fund earning 0.0001%, couldn't you keep a lower amount in the reserve fund and just know that you could borrow on that line of credit if you needed emergency money?
Absolutely. The problem will be some clerk at a bank for a prospective application for a loan will have a checklist, and it will say there should be a minimum of $100,000 in the reserve fund, or some gauge, let's say $2,000 a unit. And when they look at the financial statement, it's not there. And it's, you know, it's basically computerized. Now the building doesn't qualify. And how you hear about it as a board member is your fellow unit owner calls you up and says, our building's being denied because I can't get financing and I'm about to lose my sale. So you have to do a balancing act. So there's some number that we have to find that we need to keep on. And you know, I guess you could say to me, I only need it at the end of the year for the financial statement. So I won't disagree with you that potentially if it came down during the year, it may be better. But remember, that financial statement is a snapshot that the lenders will use for the next year, and also the budget. So you've got to weigh all that, but you know, there's some number that you need to keep. And the problem with that too is, and I've had that conversation with boards, we have $500,000 in the reserve fund and we have $450,000 worth of work. We don't need an assessment. And it's my role to stand up and say, I'm sorry, but if you don't have a $200,000 reserve fund on your financial statement, you're going to have this lender problem. So we only have $300,000 to spend. We have to raise the other $150,000. So there's so many different components, and that's a great benefit for the team that you have at Argo, that they can help you with these things.
Yeah, is the $2,000 per unit the rule of thumb for the reserve fund?
It's mine, it's Beer's law. So I don't want to say, I hear 3 months maintenance, but I have trouble with 3 months maintenance. One building has a big mortgage, or it has very high real estate taxes because it has commercial space, or it's a condominium, it has no real estate taxes in there. So I have trouble with that one. So I've sort of come up with, the minimum is about $2,000 that I see. I don't want to get below that. I'd love to see 5,000 unit in there. But a bare minimum of
So
100,000.
a minimum is 2, a target would be 5.
Right, and now unless you've got a huge project that you're about to spend all the money, then we sort of throw it out the window. But on a smaller building, $100,000, everybody seems to be that number, everybody's looking. Some of the new construction condos can get away with less than 100,000, and some really small buildings, but generally, everybody's looking for 100,000.
How do you define a smaller building? What do you mean, like 100 units?
20 units.
20 units.
20 units would be yeah, those 40 to 100 unit buildings, there's a lot of them. And you could have a 40 unit building with big apartments that is actually as big as a 100 unit building. So it's really very hard. It is a very thumbnail number. The right way to look at it probably would be square footage, but it's so hard to do that. Not everybody knows the square footage of their building. The square footage on condos is a little hard to find on the city's website. It's not as easy as the co-op, so there's a bunch of reasons that I try not to go with the square footage.